So good morning everyone. I'm Beatrice Richeboom, the Director General of ecoDa, and it's my pleasure to welcome you all to today's webinar on corporate governance for SOEs, organized by ecoDa in partnership with the OECD. So SOEs play a vital role in the global economy, managing key industries such as energy, transportation, and telecommunication. The need for strong governance structures has never been more critical in those sectors nowadays. Effective governance can ensure SOEs operate efficiently, remain accountable to the public, and contribute positively to sustainable economic development. Today's discussion will draw on the OECD guidelines on corporate governance of SOEs, which have been an important framework for shaping governance practices around the world. Sara Sultan, who is head of the SOE unit in the OECD Capital Markets and Financial Institutions Division, will make a presentation on the revised OECD guidelines. Our expert speakers will then provide their insight into how SOEs can enhance their governance frameworks. We hope today's session will inspire a meaningful discussion and offer to you some takeaways. Feel free to use the Q&A mode for any questions that you will have. But without further ado, let me hand it over to our first speaker, Sara, to kick off today's session. Sara, the floor is yours.
Thank you very much, Beatrice, and good morning, perhaps good afternoon, depending on the time zone you're joining us from. It's really a pleasure to be doing this joint event together with ecoDa and with this very distinguished group of panelists that we have today to discuss some important issues related to the governance of SOEs. It's a topic that's very near and dear to our heart at the OECD because this is really the bread and butter of what we do is standard setting around corporate governance issues, and the SOE guidelines are the leading global standard in that area, and we're thrilled to be able to share recent developments with you because, as Beatrice had mentioned, the SOE guidelines were recently revised, and I'm here today and I have a presentation that I'd like to share with you on what are the key findings of this revision, what the guidelines are about as well. So for those of you who are perhaps getting introduced to the topic for the first time, and why this revision is important and why it's timely. So the SOE guidelines, as I mentioned, are the leading standard for corporate governance of SOEs, and they're overseen by the SOE Working Party of the OECD. So the OECD is an intergovernmental organization, and it brings together all OECD member countries and a growing number of non-member countries and partners from around the world. And this SOE Working Party, which brings together parts of government that are essentially responsible for the oversight of portfolios of SOEs, is the custodian of the SOE guidelines. The guidelines are adhered to by 42 countries, including and the EU as well has adhered to them just in this past year. Any country can become an adherent to the guidelines, but it's subject to a review process, and we've had a number of countries go through a review process. The guidelines are an outcomes-based instrument. It means that we recognize there are different ways of designing policies, legislation, regulation, but the guidelines are essentially promoting the outcomes that we want to see to have a well-governed SOE sector. They're also set at a very high level of aspiration. This is really setting the bar high. It's not the lowest common denominator, it's the highest common denominator. That's to also push reform. And we say that no one country has fully implemented every aspect of the guidelines. The guidelines are also designed to ensure flexibility and proportionality because we recognize no one size fits all. So SOEs may have different sizes. They may be more commercially oriented or less commercially oriented. And the guidelines are really designed to fit within the complexity of those frameworks and also different ownership structures across countries, which look very different from one country to another. And importantly, I want to emphasize the guidelines are not addressed to SOEs themselves. They're addressed to the state as an owner. And this is important because there's an intersection between the state in its role as shareholder with the state as a role as policymaker and regulator. And so these guidelines are really addressing the fundamentals of good governance, good public governance, and good corporate governance by addressing all of these dimensions and essentially assuring that states as owners can be professional in what they do to help improve the performance, efficiency, and transparency of SOEs and ensure that the SOE sector is run responsibly, accountably, with integrity to contribute to important goals that they do contribute to and that Beatrice reminded us of. Now, we also complement the work that we do on standard setting at the OECD with a lot of monitoring work, looking at how different countries implement the guidelines. And we recently released a report on the ownership and governance of state-owned enterprises, which you can find on our website. And I'll share a QR code at the end of my presentation so you can access this publication, looking at the priority areas that we examined through the revision of the guidelines and looking at how 59 different countries around the world are implementing good corporate governance. And I'll share some of the key findings from this report as I also walk you through the strategic priorities that we looked at for the revision of the guidelines. Before I get into that, though, let me just give you a sense of why SOEs are important. So when we look at the world's largest 500 companies globally, we see the share of SOEs over the last 20 years has quadrupled. In 2000, there were 34 SOEs among the largest 500. Today, we see 126. So these SOEs are also important employers, employing over 21 million people. They own almost $55 trillion in assets and generate over $12 trillion in revenue. So they're not insignificant. And a lot of these companies are not listed. So this has important implications for their governance, as we know, because not being subjected to regulations that regulate listed companies may result in different corporate governance standards, for example, on boards requirements or disclosure and transparency, et cetera. And not having the presence of non-state investors may also reduce incentives to implement good corporate governance, but also has implications on performance of these companies compared with the listed peers. And from what we see from the data, and here you can see on the right-hand side of this chart, or perhaps left-hand side for you, the pie chart on distribution by industry. These SOEs are also concentrated in sectors that are critical for economic resilience and for the low-carbon transition. 63 of the largest SOEs globally are operating in capital and greenhouse gas intensive sectors like petroleum, refining, mining, oil production, utilities. So these are all essential players to the low carbon transition and are key for also, delivering on key public services and infrastructure in many economies. What we see is that the state is also an important shareholder in listed companies globally. So in companies where the state, or we call it public ownership, has more than 25%, in companies where there's more than 25% public ownership, we see that in terms of global capital market capitalization, this is equivalent to 12% of that. And of course, this looks different across jurisdictions, across markets. So in Europe, 8% of market cap the state is a significant shareholder. But in China, this is 47%, in Latin America, 16%, and in the OECD area, this is just 2%. So the story looks different across countries and jurisdictions and markets. This is why the revision of the guidelines came at an important time, because we wanted to reflect these changes in terms of the growing role of SOEs in the marketplace, but also reflect how these guidelines have been implemented over the last 20 years. We're just celebrating the 20-year birthday of the guidelines. And in the last decade, since they've been last revised, the last edition was from 2015. We want to make sure this instrument is fit for purpose and reflecting the realities of today, but also to ensure complementarity with the instruments that it remains, let's say, closely linked to. So there's the G20 OECD Principles of Corporate Governance and the OECD Guidelines on Anti-Corruption and Integrity. And the G20 principles were revised in 2023, and it was very important to ensure that there's consistency and coherence across these instruments. And the guidelines were revised over the course of 2023 and 2024, and there was a very, let's say, intensive revision process involving 60 different countries. It was very inclusive, but it was also transparent. And we involved consultations with a number of stakeholders. And I'm very pleased to say that ecoDa and a number of ecoDa members at the national, regional level were also key contributors to this revision process by submitting written comments to various iterations of the revision as it was being prepared and contemplated by the Working Party, but also through dialogue and discussion with OECD members. So the 4 priority areas that were really the focus of the revision this time around were related to ensuring that the guidelines address the unique challenges of corporate governance when the state is a shareholder that I had mentioned earlier in terms of the intersection between the public and private, to ensure that the state acts as an informed, professional, and active owner. The second priority area is to ensure a level playing field, given the growing share of SOEs in the global economy. The third is to recommend that SOEs remain transparent and accountable, including through high standards of disclosure, and that SOEs are really fit for purpose in having the necessary competencies, integrity, objectivity, and independence to carry out their functions. And the fourth key priority was to highlight the role that SOEs and their owners can play in leading by example in the area of responsible business conduct. And of course, as I noted, SOEs are quite material to the low carbon transition, so there's also quite a focus on that in terms of sustainability. And the new chapter was added to the guidelines to reflect these priorities. So now I'll walk you through each of these priorities one by one. So to ensure that the guidelines are really addressing the fact that SOE owners, so the state, should be professional owner, we looked at a number of things. The one is, how is state ownership organized? And what we see across jurisdictions is that over the last 2 decades, we've seen a move towards more centralized or coordinated ownership. So more than half of countries that we've surveyed have worked towards professionalizing the role of a state owner by establishing departments in ministries with coordinating functions to have a whole of government approach towards state ownership, by establishing state holding companies that may be responsible for representing the state as a shareholder in a subset of the economically important SOEs, or by establishing departments in government that might have that central role. Of course, there are many shades of gray, and every country's model looks very different. And even within one country, you have even maybe multiple models that coexist. But what we see is that this general trend. And this is important because it's also helped to separate out the role of the state as a shareholder from other functions that it has in terms of policymaking or regulation, which is also quite critical to avoid any conflict of interest issues. What we see is that a lot of countries have also developed ownership policies. So really a document outlining or a policy or even a law, sometimes in regulation, outlining what are the goals of the state as owner, like why does it own SOEs in the first place, and also how it intends to run or actually own these SOEs through good governance. And this has helped to improve objective setting. So what are the public policy objectives of these SOEs, if they have any, and also better monitor their performance. We also observe that many countries have moved towards ensuring better transparency around their SOE portfolio. So 64% of countries publish annual reports of their SOE sectors. Now, this looks very different across countries. 37% of these that I mentioned offer detailed financial and non-financial information. So this really helps to give the public, competitors, others, stakeholders, a clear sense of what are these SOEs, what are their roles and functions, and how well have they performed, both in terms of financial and non-financial outcomes. The revision then has, keeping in mind some of these trends, has strengthened the provisions of the guidelines in a number of ways. First, we have better defined the role and functioning of these centralized or coordinating ownership entities, including when this is done through state holding companies, because we also see a move towards an increased interest in either developing state holding companies or countries that have actually already implemented that model. And again, as I mentioned, this is important to emphasize the whole of government approach towards ownership. The guidelines have also better clarified the definition of ownership or control, and including the different ways in which control can be exercised. So the state may not be a majority owner in terms of holding the majority of voting rights, but may exercise control in different ways. And so the applicability and definition section of the guidelines really unpacks some of those, what we mean by control, and provide some examples of what that might look like. And the guidelines actually have better clarified what we mean by the exercise of state ownership when we're talking about state-owned corporate groups and vis-a-vis subsidiaries, because there was also some misunderstandings in terms of what good group corporate governance looks like, and so we've better clarified some of those provisions. In terms of the second priority relating to a level playing field, the guidelines focus on ensuring a level playing field when SOEs are active in the marketplace. So when they are also carrying out economic activities in competition or potential competition with other economic actors. And they emphasize a few key areas that are part and parcel of the guidelines. One is, as I mentioned, separating ownership from regulation and policymaking, ensuring that stakeholders and competitors have access to redress mechanisms, ensuring that the SOEs themselves, but the state as an owner, is very transparent about what these SOEs are tasked with beyond what they do in the commercial marketplace, and ensuring that SOEs are adhering to the same laws, regulations, tax codes, bankruptcy law, and so forth, to ensure that there's an equal footing there. What we see, though, when we look at the global level, and I'm not just speaking about OECD countries and definitely not just Europe here, is that industrial firms with at least 25% government ownership, we have OECD evidence documenting that they receive more government grants or below market borrowings compared to their competitors. So this underlines the importance of these level playing field provisions. In general, what we see is that countries report that their SOEs are subject to the same regulatory treatment. Like 80% of countries say that may be the case. But every time you kind of dig deeper, you see that no, there are quite a few exceptions. 36% of economies may allow their SOEs to have certain tax exemptions, for example. 3/4 of countries recognize that their SOEs may benefit from indirect financial support in the form of state guarantees that are not available to their competitors. And in nearly half of countries, we see that, while SOEs are subject to, for example, in the European context, state aid rules, there's still 55% of countries that don't require the SOEs to separate out their accounting and to have very clear and transparent accounting for any public service obligations they undertake that should be separated out from their economic activities to ensure better transparency and to avoid, hidden subsidies, for example, in their compensation. So the guidelines have taken all of this evidence into account, and we've revised provisions to emphasize the importance of proportionate and transparent compensation when SOEs are carrying out PSOs, to discourage the use of SOEs as vehicles to subsidize or grant advantages to other commercial undertakings, which is also indirect way the state can somehow prop up the corporate economy, but not directly through subsidies, but indirectly via state-owned enterprises as vehicles through that. We've better clarified the scope of advantages that might benefit SOEs that can be provided to them and via them, and better emphasize the role that SOEs should act in accordance with commercial considerations. And all these considerations are quite important, keeping in mind that there are also preferential trade agreements that have proliferated in the last 10 years that now have chapters dealing with state-owned enterprises and designated monopolies. And these preferential trade agreements are binding, unlike the guidelines, and they do impose certain requirements on trading partners when they're integrated into those PTAs. And there's some, let's say, parallelism between what we see in the revised guidelines and what we see in some of those preferential trade agreements. Moving on generally towards the bread and butter of what corporate governance is all about, there are two key aspects. One is ensuring that SOEs remain transparent and accountable. So looking at, for example, transparency and disclosure requirements, but also ensuring that the boards are fit for purpose. What we've seen in the last 10 years is a move towards, let's say, better and improved disclosure and accountability. Over half of countries subject their SOEs to external independent audits and consider that the disclosure requirements that SOEs have are on par with those for listed companies, which is quite reassuring. But of course, that's only half, so certainly more can be done. What we've also seen is that efforts to professionalize boards are also improving. So through putting in place competitive, merit-based, transparent selection and nomination frameworks, especially where there are state representatives on boards or dependent directors, establishing minimum qualification criteria for these board members. And this has helped also to not only improve the competency on the board, but also increase the number of independent directors. But there's, as I mentioned, room for improvement. We see that in a quarter of countries, there is no outright ban on elected politicians serving on boards, even if it may not occur in practice. And a lot of work remains to be done in ensuring that definitions of independence can be raised according to the best practices set by OECD standards. So the revisions have better emphasized the board's responsibilities with regards to risk management, including internal and external audit and controls. And I think this is really key because it was an area that was in the guidelines before, but it was somehow hidden. And we've really brought these much more prominently into the revision. We've also strengthened provisions to enhance or promote diversity on boards and to improve the autonomy and independence of boards. And the guidelines now have a much more robust definition of independence and also emphasize the need clarify rather the duties and responsibility of boards to take into account stakeholder interests. And finally, last, but I would say not least, in line with the G20 OECD principles of corporate governance, the guidelines were revised to include a new chapter on sustainability. Climate change in general remains a financially material risk for all companies globally. We did a survey of listed companies. 2/3 of them report that climate change is a financially material risk, and SOEs are no exception. What we see is that where the public sector is owner of listed companies, they actually own 18% of the shares of the top 100 listed companies with the highest disclosed GHG emissions. So the state is a shareholder in these companies. But what we see is that in only a quarter of countries, states as owners have really clarified what their goals are related to sustainability and low carbon transition in their ownership policies. In listed companies, we see, for example, on disclosure aspects, 51% of a sample of 500 listed SOEs disclose scope 1 and 2 GHG emissions, so that's pretty good. But only 23% disclose scope 3 emissions, so there's more progress to be made. So this new chapter on sustainability focuses on a few key areas. One is it looks at the level of the state and how the state as an owner can clarify its expectations on sustainability-related issues towards SOEs, and what is the role of the boards into taking into consideration those objectives to basically incorporate this into the strategy of the company, and also to take into consideration also sustainability reporting and disclosure, which we know is a fast-moving field right now. It also clarifies the role of the board in considering sustainability risks and opportunities, which I think is critical. And finally, ensuring that SOEs are held to the highest standards of integrity and responsible business conduct, and that they remain responsible towards their stakeholders, including employees. So that's basically, let's say, a comprehensive overview of what's changed and some key trends. And you're welcome to access our content online. And I very much look forward to the discussion that will follow. Thank you very much.
Okay, so thanks, Sara. We will continue with the panel discussion. I'm Rytis Ambrazevicius, the chairman of the board of ecoDa. I'm also heading the Institute of Directors in the Baltic states, Estonia, Latvia, and Lithuania, called Baltic Institute of Corporate Governance. And at the same time, I'm also the professional board member, serving among other companies, serving about 15 years on the state-owned or municipality-owned boards. So I would like to introduce our title of our panel today: Enhancing Board Excellence, Leveraging OECD Guidelines for Advanced Governance Practices. And let me introduce the panelists. Irena Prijović joined us from Slovenia. Hello, Irena.
Hi.
Irena is the executive director of the Slovenian Directors Association and an experienced supervisory board member, currently serving as the chairperson of the supervisory board at National Gazette, a state-owned company. Let me introduce Professor Dr. Klaus-Michael Ahrend, who is joining us from Germany. Hello, Klaus-Michael. Do we have your voice?
Yes, hello.
Hello. So, Klaus-Michael is CEO of HEAG Holding AG and Managing Director of the Technology and Startup Center Hub 31. As an investment manager, he is a member of various supervisory boards, has been responsible for M&A transactions, led growth and cost-cutting projects, and also served as an interim manager. His key sectors are energy and environment, health, corporate services, mobility, and information and communications technology. Quite a lot. Welcome, Filip Gorczyca, who is joining us from Poland. Hello, Filip.
Hi, hello, everyone.
So, Filip is a management board member at the Polish Association of Independent Non-Executive Directors. He is also represented at ecoDa at the discussions at OECD on the new guidelines on corporate governance of state enterprises. Filip currently serves on the supervisory boards of 5 publicly listed companies in Poland, and previously he acted in a number of senior executive roles. So before we will start with the panelists, with the panel questions, maybe I will ask you, each of you, to present your national corporate governance frameworks that everyone will understand. Where are you from and what are the frameworks in your respective countries? So let's start from Irena.
Thank you, Rytis. So Slovenia started with centralizing this governing body entity for the SOEs in before 2010, because in 2010 we already accessed the OECD membership, and that was a huge potential for us to make these changes. Since then, we did, in last 15 years, we did two entity status changes, but nevertheless now it operates as a joint stock company. It's called Slovenian Sovereign Holding. And I do believe that we made a huge progress in 15 years. I do remember my colleague from Finland at ecoDa, Olli Virtanen, saying, okay, you'll need at least 8 years to make some progress. And in 15 years, I do think that we really professionalized the implementation of these standards comparing to the situation before 2010. So we have updated legislation, we have soft law, which is regularly updated through the CEO Corporate Governance Code, through the recommendation of this entity. We have mandatory education for supervisory board members who want to take positions in SOEs. We have a nomination committee, an online exam for the candidates. We have really set rules of expectations to the SOEs from this governing body. But nevertheless, I do estimate that the gap exists in the if you compare the professionalization with the non-SOE companies, especially in the compensation of the management board and the supervisory board. So this is something we maybe address a little bit later. We can have a really optimized process and rules for the SOEs, but however, it's generally understood that whenever elections occur and we have a shift or change of the ruling political parties, a new CEO of this governing body comes to place, and which then, cascades down to the changes in the supervisory boards of SOEs, which can lead also to the replacement of the management in those companies. So this cycle appears to repeat, and it's carried out with various let's say, professionalism of ruling political parties, depending on how deep an expert pool of the candidates they have and the maturity. So I do believe that the maturity really rised. If I compare to what we in past had to do with the media, when the situations were really absurd, the nomination processes, this is less occurring now. Just for
Thank you very much. Thank you very much. Very, very interesting and valuable experience. So let's go to Germany now. Klaus-Michael.
Yeah, thank you, Rytis. In Germany, we have far more than 20,000 SOEs, and the number is continuously growing. So the importance is high and will be remaining high. They are governed by a two-tier board system. So we have a management in charge and non-executive directors that oversee and advises the management. And we have law, of course, also in Germany regarding corporate governance, like the HGB or Gemeindeordnungen and HGRG. And we have soft law, so several codes for public corporate governance. One is for the state-owned ones and for the federal level. And we have several different ones for the municipal or the county or the state level. And empirical studies show that public corporate governance codes can enhance the governance and efficiency of boards. So my aim, and also perhaps our joint aim, is to improve these public corporate governance codes with also the help of OECD, and so to improve the public trust and to ensure public interest.
Thank you very much, Klaus-Michael. And let's move now to Poland. Filip, can you tell us?
Yeah, so in Poland, there is permanent discussion on how to govern the state-owned enterprises. There is unfortunately not one coherent model. So most of them are actually governed via the Ministry of State Assets, but not all of them. Some of the largest enterprises are also governed by other ministries, for example, Ministry of Infrastructure and so on. We also have the two-tier board system. And what is quite peculiar in Poland compared to some other countries is that a large share of the largest enterprises in Poland are still controlled by the government. Luckily, many of them are listed on the stock exchange, so have minority shareholders, and in many cases, even almost 70% of the shares are owned by other shareholders, but still the government retains control. And also on the stock exchange, as you might know, in Warsaw, compared to other countries, the stock exchange has been quite developed. There are really a large number of companies listed on the stock exchange. However, from the 20 largest companies, so the big 20 index, this is the 20 largest companies, 8 of them are controlled by the government. And we basically have the same issues as Irena described in terms of the new government coming and then new CEOs and then this cascades lower being appointed.
Thank you. Thank you very much, Filip. So in the Baltic states, Estonia, Latvia, and Lithuania, we have state-owned companies governed by the particular ministries, but already very strong discussions are ongoing to centralize, like Irena was talking, they made it back in 2010 in Slovenia. Majority of these companies are having the two-tier structures, specifically in Estonia and Latvia, and Lithuania as well. But in Lithuania, we have a very flexible company law, and you can establish any structure you want, either US, either UK, either German, or either Nordic, or whatever. So it's very flexible. And majority of the board members are independent. This is also included in the regulations, and the selection of the board members is very transparent. Some of the companies are listed, but not many yet, but we are moving towards that direction. Okay, so now thanks to all for your short introduction. I want to encourage, before we'll start our discussion, encourage our participants to put your questions, ask your questions in this Q&A button by clicking Q&A button, Q&A on the bottom of your screens. We have already 2 of the questions. Great to see. And now we will turn to the panel discussion, and it will have 2 parts with the last 4 Q&A. So in the first part, we will discuss the revised OECD guidelines on corporate governance. And the second part will be on discussion on the current challenges of state-owned enterprises governance. So let's start from the first topic. It is emphasized in the guidelines the importance of the government as a professional owner and what can be done to achieve it, right? So to give the brief context, in many countries, the state as an owner of the business enterprises is the biggest or one of the biggest. It means that the impact of state-owned enterprises is huge, and the government's role as a professional owner of SOEs is critical to ensure that these enterprises serve the public interest while being operationally efficient and transparent. So professional governance and management of SOEs result in better public service delivery, economic development, accomplishment of critical national goals, as well as improved trust, not only within country, but also outside the particular country. So the question to our panelists, how can the professional level of the government as an owner of SOEs could be enhanced, and what are the good practices? So let's start from Irena.
I do think I maybe touched in the introduction first the issue that it's really important that we have knowledgeable political parties also in corporate governance that can really serve the best, also the centralized entities who governs SOEs. So through the years of these 15 years when the political parties were usually changed, you could see the gaps. So I do believe that we have this system in place and that the progress was done, but as we can see also globally with the maybe peace agreements and other agreements done among the countries, we can always regress. And when we regress, and this happened also in these 15 years, usually due to not knowledgeable politics taking place and taking decision making, when you do regress, it's really hard to come back. Then the people and the stakeholders among the SOEs, employees, personnel within the governing centralized body come to the frustration that things really don't change.
Yes.
So I do believe that we have systems in place. I do believe that we must take this effort to implement the process as well as we can do. And also, if you do believe in good oversight, you must act on the professionalizing also the remuneration compensation towards supervisory board members and the management teams employed in these SOEs. So
Thank you.
maybe
Thank
just
you.
for
Thank you. And Filip, maybe you can add some shortly.
Yeah, so first of all, I noticed that when there is a group of people discussing solutions for improving corporate governance of state-owned enterprises, and you look at the faces of those people, it is clearly visible that some of them are smiling and some are not. And the first group, so those that have a smirk on their face, are those that have actually experience in working on the boards of SOEs. Yeah, that's what I noticed. And the reason for that is that those that have the practical experience probably might better understand how complex and difficult a topic it is. So even within one country, let alone comparing between countries. So there are, for some solutions that might perfectly work in Sweden might, for example, be completely not make any sense in Poland. Yeah, and also this changes over time. So, for example, some solutions that have been developed in Poland in the 1990s and then made quite a lot of sense when the market economy was very young might not make sense today. Yeah, so certainly, we all. I try to have huge humility when discussing this topic, because that there are few very obvious solutions that would fit everyone. One experience that we've had in Poland, and which I believe is quite important, is that, as I mentioned, many of the largest state-owned enterprises have been listed on the stock exchange, and that happened in the 1990s and 2000s mostly. Yeah, so so quite a long time ago, and so the government retained control. But the fact that they are publicly listed has helped actually in many ways to partially offset some of the weaknesses and challenges of state ownership. So, for example, greater transparency, greater public and media scrutiny, which is also important, continuous market assessment and evaluation of the performance, and also forcing a purely business angle, or mostly at least a business angle in setting objectives for the management. So that's certainly an experience that can be probably shared and maybe used by other countries as well.
Mm-hmm. Thank you, Filip. And Klaus, do you have something to add from Germany?
Yeah, two examples I would like to add. In Germany, most SOEs are not listed. So first, we have in most German jurisdictions the publication of a yearly report regarding every SOE owned by the municipality or the state. And that enhances transparency regarding the financials and other KPIs, and as well as regarding if the companies comply to each topic of the Public Corporate Governance Code, or they explain which recommendations they do not adhere to. And second, in Germany, most supervisory boards members are political leaders, so they are more or less independent, more or less. Also, therefore, we offer trainings for all members of the supervisory boards in a lot of cities, also here in Darmstadt, and that is very important because most members are not business leaders. The trainings range from duties of supervisory boards, the strategic goals of the companies, compliance issues, accounting and controlling, and other topics regarding the industries of the company they are dealing with. And of course, regarding also the local corporate governance code.
Mm-hmm. Thank you very much. May I add few practices from the Baltic countries? One is that if you have in your country quite strong institute of directors, whatever you call it in your country, I think this could be a good partnership, to cooperate with the government and to explain them and to help them to develop the governance practices. This is one. Another, already Klaus mentioned about the education or improving the knowledge level of the civil servants or those that are either in the ministries or in the government institutions or already serving also as a delegated members on the boards. So in the Baltics, we developed a 4-day program for the civil servant on corporate governance of SOEs, and we made this for free for the government or for those civil servants, and it was accepted so highly, so well. And we already had, since 2019, we had already 5 groups, each about 30 people. So we are making kind of investment in this way into the knowledge and professional level of the owner, means the government. Okay, yeah, we have some questions already, but maybe we will turn them. Yes, somehow I answered some of the questions, and some others we will. Yes, so mechanism to use the professionalize SOEs boards. Actually, you have to define very clear and transparent process of appointing, selection, and appointment of the boards. And of course, increase as much as possible the number of independent or share of independent board members. Let's talk about the expectations and objectives that are defined by the owners, means the state, for SOEs, and the importance of transparency and so on. So I just read the quote from OECD Guidelines that the state should clearly define owners' expectations, allow SOEs full operational autonomy to achieve them, and refrain from intervening in the management of SOEs. The state, as a shareholder, should redefine SOEs' expectations in a transparent manner and only in cases where there has been a fundamental change in mission. So the question for our panelists is, what are the real practices and where do you see the room for the improvement? Let's now start with Filip.
Yeah, so in Poland, and probably some other countries as well, one might ask whether it is a lack of transparency or lack of such clear expectations and objectives and lack of consistency in the first place. So even under the same government, it's sometimes not clear whether there is any coherent strategy, let alone when the government changes. That's also what Irena mentioned earlier. So even ensuring that such expectations and objectives are clearly defined might be a huge step, while ensuring that they are transparently disclosed would be a giant leap. Yeah, that would be obviously perfect. Also, on the topic, there are also questions on the incentives and goals for the management. I personally believe that actually it's quite important that there are some incentives and goals for the decision makers and employees at the ownership entity level. So, for example, the ministry, that would be linked to the performance or the value of the SOEs. So they might be even symbolic. Yeah, it's not that those need to be $1 million. It's not possible, obviously, for political reasons. But even like symbolic, even small amounts, or even goals that are even not transposed into remuneration, it is quite important, and that would help certainly, at least in Poland. That's my personal belief.
Mm-hmm. Thank you very much, and Klaus.
Well, we have defined strategic expectations of the owners of all companies owned by the city of Darmstadt here in Germany. And these strategic goals are defined by members of the government and the management teams, and it's coordinated by us, the HEAG, as an internal consultancy for all subsidiaries of the city, which is a good advice for other cities as well. The strategic expectations are regularly updated every 5 years, not so often, but it's regularly updated, and that's enough for my opinion. If you're interested to learn more on those strategic expectations, I put the website in the chat.
Mm-hmm. Thank you very much. Irena, do you have to?
Yeah. Just to add a little bit to what Klaus and Filip said, it's that also we have yearly expectation defined in advance from the centralized governing entities. So we have also regular meetings with my own experience as a chairwoman of one of the supervisory board of one of the SOEs is that we regularly come to the meetings with personnel dedicated to our company, and we explain the outlines and the reality for plans, and we have a little of like a negotiation process going on, but nevertheless the expectations are set clearly, and due to the transparency, the Slovenian sovereign holding the centralized governing entity yearly reports of SOE's portfolio. So I do think that whoever is interested can gain quite a lot of information, and then this process is quite different than it was in so many years ago when they tried to enforce. There is somebody expecting something from you, and you as a supervisory board member and the CEO come to these meetings, and it's pretty much different when those meetings did not exist at all.
Thank you, Irena, very much. And actually, the Baltic perspective here is that we are already having the letters of expectations for a quite long time already, and actually their perspective, I mean, time horizon is really very long. I would say in almost like without no limit. It's more than 3 or 5 or 4 years. And usually they are not revised quite often. Sometimes it happens, but it's crucial actually not to revise every year or something, because actually based on these letters of expectations, the strategies of the companies are built, because the boards are looking to reading the letters of expectations, and if expectations are changing every year or so it's a challenge. So okay, thank you all, and then let's turn to the topic on the risk management and risk governance and external audit and controls and everything what is related to these areas. So how in this quite challenging world for the boards to succeed in these important areas of the corporate governance, risk, internal audit, internal control, and so on and so on. So let's start from Filip.
Yeah, so in Poland, the state-owned enterprises are actually not laggards in those areas, especially those that are publicly listed. So usually the issue is that actually they focus too much on those areas at the cost of innovation, willingness to take risks, and pursuing business goals with high determination. And the second issue is that they are not actually doing it effectively. Yeah, so a lot of time is spent, for example, on very formal very formal angles in those areas, rather than trying to look at what is really effective. And certainly also corporate governance rules that are very detailed do not help sometimes. Yeah, so if there are like a long list of topics that need to be covered, then they become basically the entire plan, and you simply go and tick the box. So this is also what doesn't help.
Thank you very much, Filip, and then Klaus. You want to...
Of course, these topics are very important and they should be taken into account. But I would like to stress what Filip said. Also in Germany, these topics are very focused on, and I would like to stress also the importance of new business models as another focus of risk, the positive side, and working also with innovative companies in the region. We have, as SOE world, or in the SOE world, we have to focus also on innovation and new ideas. That is also an important topic of public corporate governance.
Thank you very much. Irena, anything from your side?
Yeah, just to add on what Filip and Klaus said, it's in SOEs, we are more likely to be this compliant mode of being supervisory board members with taking all the exercises, like maybe similar to the financial institutions, because the obligations and expectations are high and we are under also public and media scrutiny a lot. But nevertheless, I do think that we have a huge room for improvement into becoming this more business-oriented supervisory boards. So moving more from this oversight duty that we of course have, and that it's a majority written in also in legislation and in soft law, more to this business side of orientation, supporting the management, supporting the innovation, different business models, now with the also with the sustainability, and Klaus was mentioning risks, and on the other side there are always opportunities, moving there. And I do think that this is this is not easy to move and learn to move from this mode as years and years, and maybe we lack also the what we've seen until now in the boardroom. So I did met a few colleagues with a different mentality of leading the boards, and I would deeply support that we try to find these models and try to implement some of the things that those colleagues have done into more business-oriented boards, also in SOEs.
Yeah, it is extremely important indeed, Irena. Thank you very much. So from my perspective, I just want to emphasize the importance of these governance areas because actually it is safeguarding the reputation, the well-being of the company, of state-owned enterprise. However, my observations are that such areas are usually not the strongest in all the kind of setup of the tasks that the boards have. So this is really to emphasize very much and to improve further on the board level. Okay, I have a specific question because to Klaus, because you mentioned this model code for corporate governance you recently published for German municipalities and the states, right? So what are the key takeaways, and how does it connect to the OECD guidelines that we're talking today about?
Thank you, Rytis. Together with an experts commission, we have developed the German model code for all state-owned enterprises in Germany regarding corporate governance. And that is a strong help, and also linked to one of the questions of the audience. How could you convince the owners or the municipal level or the state-owned level, state ownership level, to do a revision? And of course, our model code is one of the answers. It is a strong help and closely linked with the OECD guidelines. It is the German one, of course, for German companies, the OECD one for internationals. By the way, it is also available in German and, of course, also in English. And the crucial elements have a lot of similarities. And I put some of our insights to the OECD revision process, and vice versa. We took parts of the OECD guidelines in our model code. I put a link also in the chat.
Thank you very much. Thank you, Klaus. Irena, maybe you want to add something here?
Yes, as we've discussed before, this webinar, in Slovenia, Slovenian Directors Association, which I lead, and Anti-Corruption Commission and associations of different municipalities, we joined forces, and we also did a special code, not an SOE code, but a code for municipality-owned companies. And my takeaway is that the maturity of corporate governance in those companies is far lagging behind, really. So it's huge. It also shows that there is nobody really systematically pressuring and having the oversight. So I do think that having a code and soft law helps them. And those who already want to learn are coming also to the courses, are knowledgeable and everything. But in Slovenia, we have over 200 municipalities, and they all join in different, like they are 8, 9, 11 of municipalities owning one company. And there are huge problems, issues already within the ownership of the companies. So I do think that we'll need to progress in this field a lot.
It's still room for improvement, I hear.
A lot.
Okay, thank you very much. So then let's talk about the independence on the board. We already mentioned several times that there should be independent board directors. So what does it mean, independent board director? And maybe what are your recommendations for independent directors of the SOE's boards, and what are the best behaviors of the directors? So maybe let's start from the Filip.
So I believe that independence has a somewhat different practical meaning in state-owned enterprises versus the privately held companies. And that's for a number of reasons. Yeah. So in my experience, the actual, independence rules for board members are not enough to assure independence of the board in state-owned enterprises. Yeah, so it's a much bigger challenge. And in most cases, I would say that we can talk about true independence at state-owned enterprises only when a board member has been nominated by a stakeholder other than the government. So, for example, the minority shareholders, if the SOE is publicly listed. And if this is not possible, then only when an individual combines high integrity with very senior profile, so doesn't need to care, is maybe, retired or semi-retired, has been the CEO of a company for 15 years, he is a wealthy individual, then maybe, it's such a person, but there are not that many such people. So not only the criteria are important, but also the process of appointment is really critical at SOEs, especially. Yet privately held companies as well, but not as much.
Thank you very much, Filip. Irena, do you have something to add from your perspective?
Yeah, maybe if we also we could see that we can have kind of clean board members in SOEs. They lack any connection to the political parties. They could be independent judgment, independently minded and everything. But where the devil happens, usually it's within the process of the mandate. If you are either chair or there is an important decision-making process, investment, or maybe CEO replacement, whatever, you can become a target of some undue pressures. So it's really important what you do then. So I can see Klaus smiling.
Yes. Klaus?
Well, in Germany, we have the opinion that most political influence should be done or should be implemented by having supervisory boards, mostly consisting of political leaders. So there might be an improvement if some of the political boards get some independent members also on board. But I think that's not new for most of us.
We don't have politicians on boards. We have a legislation put in place that, it's not possible if you are in a political party functioner holding this kind of functions to be. But nevertheless, they are just a few steps away. You can make the political pressure, nevertheless, you're not on the board. So we make their life harder. But it's not that they don't make their way towards the lobbying, towards some political decision-making. So it's important, even though we have this kind of really independent, clean persons within the boards, it's not always a solution because people could trade. It's not financial trade. It's like you do this and later on we'll see, this kind of stuff. So even if they don't promise, people might count on, going towards what politics is saying. So this is important, what you do when you are on the board.
Yes, exactly. Actually, in addition to this formal requirements of independence, I think this independence of mind of the board member is also very, very important. Okay, and then we will come back to our topics and maybe the last question when talking about the guidelines, because it's a new chapter that we have about the sustainability. So the question is how the board can contribute to overall improvement of SOE's performance, thanks to the integration of sustainability matters into the company strategy, business model, and so on and so on. So maybe Filip, you can start. Maybe you have some good experience and advice.
Yeah. So that's I believe that the state-owned enterprises should be obviously role models in this area, and that's obviously probably clear to all of us. I don't think that you can actually criticize in Poland the state-owned enterprises in this area versus other areas that much. They have done pretty decently, but that the other side is obviously that they are not that much business oriented in terms of their financial performance, and that's easier than for them to really do a lot in terms of sustainability. Yeah, because versus the privately held companies, especially when there is a one owner and the main focus is obviously profitability in the short term as well.
Yes, thank you. Klaus, do you have some insights?
One of our key differentiators of SOEs is having a sustainable business model, mostly on the place or in charge in place. And those sustainable business models of a lot of SOEs I know in Germany and of other countries should rely on, of course, on the CG, on the corporate governance side. So it's a strong hint, a strong support for having those sustainable business models in mind and still running them. Of course, they should be ecological and social, viable or profitable if you want. And they should, of course, most of them should be profitable in the economic sense, but not all of them are. So we have a good fit to keep in mind all three elements of sustainability.
Thank you. Irena?
I would just agree that in SOEs we should be pioneers, but I do think that we all are in a learning curve of lacking real knowledge, and most of the companies now pressured with the size of the companies with this reporting on sustainability, it's showing how hard it is to implement and do everything and go beyond just reporting, and then again return to this innovation, different business models. And I'm not sure why in private companies things happen quicker, or decision-making process is kind of easier, but apparently we also in SOEs moving towards sustainability. As a board members, we are under the huge pressure to make this difference, not only towards regulation, but really a change of business models as well.
Yeah. Yes.
Yeah, to be a long-term sustainable, like Klaus is saying, maybe it's also pressure not only on environment, on E, but also on the S component and G component, much more than maybe in some private companies who can say, okay, you know, we're still doing something on a social, but if you side as not to the best practice, but if you are in a SOE, the expectation and the public scrutiny, it's really huge. So you must consider it well before taking decisions.
Yes, thank you very much, Irena. So actually, what is crucial to understand that it's not only the reporting and kind of compliance with some EU regulations and so on. It's about the changing the mindset towards the sustainability, embedding it, you know, its elements, we can say them as ESG or so, into the strategy, into the business models. And it's not the task for some few sustainability managers in the company. It's firstly is the task for the board to lead this transformation. And to be able to do this, I think the board and actually the top executives should learn a lot. Irena, you already mentioned this learning curve. So we see that the knowledge is still not the highest, you know, on the highest level in the boards related to the sustainability. And one of the reasons, it's my belief that that's why we cannot find the good ways how to transform the strategy and business models and to succeed in this area. So you know, the board should lead this path and drive the directions. And I think that we see also many companies that are really very good in that. And if you need some information, you know, ecoDa has on its website a lot of information on that, on guidelines and the recommendations and so on. Some particular institute, including ours, we developed the guidelines together with EY and so on and so on. And there are some really reputable consultancy entities that can help you with this. Okay, let's finish this part and let's move to another part about the current challenges in the governance of state-owned enterprises and related topics. So the further professionalization and improvement of the transparency of the board appointments, and we saw the questions already here that from our audience. Do we have some specific recommendations and comments? So, for example, one particular question, there are some delegated from the owners, means the state or the government, and independent members. Do they have to be appointed using the same process or to different processes? Maybe you have some experience. Filip, maybe you can start.
Yeah, so SOEs in many countries in CEE, especially when you look at Europe, he experienced huge issues in this area, yeah? So have challenges. And so the lack of process of supervisory board appointments in those countries where you have this two-tier board system, like Poland, so the lack of process that follow such guidelines and are free from undue political influence leads to many negative consequences and cascades to the lower corporate levels, starting from with the management board appointments. So therefore, fixing those processes is a critical step in any efforts to significantly improve corporate governance at SOEs. In Poland, we have not had actually huge success so far, unfortunately, in this area. So we are still looking and discussing of how to fix that and looking at other countries. Now there is a document which is being prepared by the Ministry of State Assets, which also addresses this topic among others, and is addressed, there's like best practices of corporate governance, specifically for the state-owned enterprises. Yeah, so certainly I would also actually be from the Polish side would actually be on those asking the question how to fix that. So maybe some other countries have done a better job at that so far.
Irena, maybe you have some good practice.
Yeah. What I've seen in practice as a kind of frustration also in the nomination processes of SOEs, so that wherever the state is not 100% owner, by the legislation, the supervisory board is the one responsible to make a list of candidates for the General Assembly. And what happens is a kind of two-tier system of nomination processes. So if you are listed as SOE, you do it yourself as a board and maybe have a nomination committee. Maybe in this nomination committee, you also have representative of the governing centralized entity who cooperates already within the process. And then on the other hand, you have already well progressed the nomination process within this governing entity, which has a life of its own. And at the AGM, when these things collide, many of the supervisory board members think, why do we do this process? Because when they come at the General Assembly, it's if they have the majority, it's what they are saying. You do all this process on the level of the supervisory board, and of course the shareholder legally is the one who decides with a majority of the votes. So I do think that both processes are of higher standards, and the competences that people expect are higher, but we still have issues concerning how nomination in practice is done.
Yes. Thank you, Irena. Klaus, do you have some?
Just a short comment. We need more nomination councils, and in very big companies we have them already, but I think they should be normal or normalized. And then the number of independent members, also of those with political backgrounds, could be increased.
Thank you. I just want to quote the OECD guidelines. All board members should be selected on the basis of merit, personal integrity, and professional qualifications using a clear, consistent, and determined set of criteria for the board as a whole, for individual board positions, and for the chair, and subject to transparent procedures that should include diversity, background checks, and as appropriate mechanism aimed to preventing future potential conflict of interest. So it means it has to be one process. And actually in Estonia, we have this process, and the government established the nomination committee where the majority are not the civil servants from the government, but independent experts. And it also gives, of course, it elevates professional level, elevates the trust, and so on. Because we had one question, Sara already answered it, commented, what types of incentive mechanisms should be implemented to increase the diversity, means gender expertise, international experience in corporate boards. Actually, it starts from the trust. If I do not trust our government, if I do not trust the particular minister who is the owner, and I do not trust the process of selection and nomination, I will never go to that board, whatever the money or whatever amount you will be paying to me. So first is the transparency and trust and professional level of the whole process, and then it will be improving. Okay, maybe some additional questions. We have some time. Remuneration of the board members of SOEs. What improvements are needed? Should remuneration be set on the market level? Some incentives, some bonuses based on the performance, and so on. So maybe let's start from Filip. You have some listed companies.
Yeah, so we have rules on that. There is a specific act in Poland that addresses and limits the remuneration of supervisory board, management board members at all state-owned enterprises. You know, the levels, especially at the large enterprises, they are not dramatically low or lower than but they are significantly lower still than the privately held competitors. Yeah, and I don't think it's possible in countries like Poland, at least, to change that this part of the problem, because it would be a political suicide for the government to allow the management of an SOE to earn millions of dollars. Yeah, it's unfortunately, yeah, even if they do a fantastic job. So certainly my experience is that actually that's why the criteria for nomination and appointment of board members, especially the management, the executives, should be a bit different. You need to be more self-driven here and ambitious. So there are like people who perform very well when they have a huge carrot in front of them. And if not, they are not motivated. So such people are not really probably the great candidates for state-owned enterprises. Here you need to be, more really self-driven and self-motivated. But yeah, I mean, certainly this act it's mostly criticized, but I believe it also actually has many advantages, and some of the solutions could be actually an inspiration in some other countries. Yeah, so it's not like all wrong and without any sense. And certainly it has helped at least to, and that's a huge gain. So now boards do not need to waste a lot of time discussing those topics, because basically the criteria and amounts are already predetermined. Yeah, so it actually has increased the effectiveness, at least, of all those remuneration discussions.
Mm-hmm. Yeah, very interesting. Irena, do you have something?
I would oppose to what Filip said, because I do think that you might, if the remuneration is really low, you can stimulate misconduct. You give power to those people. You must have a certain level of remuneration set. And if, like in our case in Slovenia, this basic salary of SOEs is legally regulated by the simple ratio of the average salary within the company, and you have a labor-based company, it can be low and the company can be really huge, and the operations and the subsidiaries and everything. And I do not think that the self-driven moment is here an answer. It also passivizes the boards. You don't have to think, is this good? Supervisory board, not to think about the remuneration and the KPIs. So I do think that we have a problem. And also at the same side, if you don't pay well the oversight supervisory board members, which in Slovenia, nevertheless, that the Slovenian sovereign holding company have set the rules, they are not implementing their own rules. So supervisory board members are really frustrated with the low and below market market price for the oversight, and the oversight becomes more and more complex. Knowledge you have to put in, and expectations are high, and also the demands. For example, 5 years you are legally responsible for what you've done as a supervisory board members in private companies, and for 10 years in SOEs in Slovenia legally. So the expectations are high, and the remuneration, it's so this is not good. I don't support this,
maybe I've phrased wrongly what I meant. I meant that I fully agree. I mean, in a perfect world, the remuneration criteria should be the same as at privately held companies. What I meant is that if you have a framework and you cannot change that for political reasons, and you are, let's say, a supervisory board member, then you need to take into account that within this framework that has its limits, maybe you need to look at some other criteria when appointing the board members. Yeah. So also what you meant that you need even higher level of integrity, for example, because that certainly might. So that was what I meant. Yeah. I didn't. I obviously do not support the remuneration being low at the state-owned enterprises. Yeah. I'm just saying that's unfortunately how things are in many countries.
Yes, I agree. Klaus, do you have some short comment here?
We need a benchmark of those who are running public companies, and that's a crucial point that we can't compare with listed companies. I think that's normally the case. But if the public company is listed, then it might be, of course, also the benchmark of other listed companies in this way. As Filip said, and also Irena, I think the topic in the OECD guidelines is also regarding remuneration on a yearly basis or the midterm or the long-term payments. And of course, most companies I know focus on the yearly basis and not on the long-term incentives. But that's of course dependent on the size of the company and if they are listed. Most of the German companies are not listed, so they are focusing on the yearly remuneration.
Thank you very much. So actually I can share as well from the Baltics some experience. So in Lithuania, until some years, we had the rule of remuneration of the board members up to 25% of the average CEO salary, monthly salary. And then because in our countries, I mean, these regulations are applicable for the state-owned enterprises and municipalities. We found out that in municipalities, some of the board members are paid 150 euros a month. So it's not the salary or it's not remuneration. It's like, I don't know how to call it softly, right? So then the government decided to flip this, and it is now the rule from 25% of the annual, monthly average remuneration of the CEO. So now some smart, so to say, municipality guys are not able to pay some peanuts, you know. And it's a little bit, it has some positive impact, I would say. And in Latvia, it is related, it's multiplier depending on the size of the company. That we have some 3 sizes of the company: small size, middle size, and big size, and just different multiplicators based on the minimum salary in the minimum wage in the country. So it's very simply regulated, and it doesn't depend on the mood of particular, I don't know, minister or whoever will be deciding on the remuneration. So that's I'm looking to the clock. We have 3 minutes left, so we have to wrap up. So I'm very happy that Sara took over the answering the questions, and Klaus as well. So we were a little bit of multitasking today during our webinar. It's great. So we saved time for our discussions and insights and advices. So if I may to thank Sara and Klaus and Filip and Irena as well for the great contribution, and maybe a few last words, you know, and some you know, greetings for the future. So as we learned that importance of SOEs is growing globally, it was presented very clearly by Sara. And due to the fact that they are providing critical services for our societies, for our businesses, it is very essential that they will be governed using the best practices. How to achieve this? So we discussed that we need to improve the professional level of the owners, means the state, the government, the civil servants, and so on. We discussed a lot of options from education and so on, cooperation, and helping them to find the best options and solutions how to improve the governance of state enterprises. Then building the board, as I already indicated just a few minutes ago, that the potential professional board members that will be willing to join the boards of state-owned enterprises, they have to have a real great trust in the government, in the process, in the maybe particular minister, and so on. So this is the core, because if the boards will be professional and independent, you will see the really good results for years to come. What is important for the boards themselves, that they have to challenge not only the management, but they have to challenge themselves first. So first they have to to develop themselves, to educate themselves regularly, because everything is changing very fast now. So only then the boards will be the true leaders of the companies. Then accountability, transparency, and all this disclosure. So this is really increases the trust. So the boards should not forget these important aspects of the governance. The boards that will be really able to create long-term value for the companies, for the shareholders, for the society, other stakeholders, and so on. From my perspective, I would say we have to think about 3 elements: the smart challenging, efficient control, because a lot of people are thinking that control is like a brakes in the car. No, actually, in certain extent, yes, but it's like a Formula One brakes. The more efficient you are with your brakes, the faster you will reach the finish. And then the valuable support of the management and the whole company, because the boards usually have tremendous experience. So let them help the companies. So let's use the amended guidelines that we discussed today to improve the governance of our SOEs and contribute to the stronger companies, economies, and our lives. And thank you all the participants that were so active in raising the really very relevant questions. So, and see you in the next events of ecoDa. So thank you all. And
Thank you very much.
Thank you for having us.
Thank you.
Thank you. Bye-bye.